How do you know if today's a good day to trade? A lot of people start looking at trading like it's their job, meaning they have to show up and do something or they don't feel like they're doing anything. Trading is kind of opposite to working for somebody else in the fact that even by not trading, you're still doing something positive. Meaning, if it's not a trading day because you just don't feel it, because of the world climate. Right now, we're in the middle of a possible war. Because you're getting interrupted by your wife, your spouse, your job, whatever. You didn't sleep the night before. Any of those things can make it a non trading day. But that doesn't mean you're failing. That doesn't mean you're losing. And that doesn't make you any less of a trader. As a matter of fact, by consciously choosing when not to trade, you become more successful at trading because you're choosing to go in when the environment's working for you, when you feel awake, you had your sleep, you're doing all these things. Society has us programmed that unless they're doing something every day, they're lazy or they're failing. A wise person who learns to trade properly knows that a non-trading day is still a successful trade because you're better to take nothing and not stress about it or risk a loss, risk a wound, risk an injury than you are to force yourself to take something just to make yourself like you're being feel like you're being productive. That's how you know essentially when it's a trading day or it's not a trading day. A lot of it's environment. Now, the second part, and what I think you're actually asking me is, how do you know when the market tells you it's not a trading day? We have low open interest across the board. We have flat volume on SPY and Q, meaning it's not trending up, it's not trending down. It's sort of hovering within a very small zone between up and down. It's not, it's just pretty much level. And it's consistently staying that way. You don't see a lot of pending open interest for stuff that's catalyst positioned. What do I mean by that? You say you had NVIDIA that had really good runs and really good position on their financials for the year. Their financials came out and everything is beautiful. Fantastic. They're on their way up. They're great. They're making a fortune. But you don't see that translating to the market for them. That generally means the market is either being suppressed by the big whales wanting to push down a potential call to make their position later on worth more, or the market itself is just trending water back and forth. I always equate the market to an ocean. If the waves are going the direction you want, it's very easy to make distance. If they're pushing against you or just swapping back and forth, and you have to paddle or use your motor to get anywhere, you're burning fuel. And every time you burn fuel or energy, you're risking the fact that you might not be able to sustain it. So the market itself will tell you based on open interest, the availability and the movement of SPY and Q, and looking at large movers, not specifically the industries you're in, but large movers to see if they are being affected by the market or not. Because if they are, and all those other things being equal, it's probably not a trading day. But primarily, a person should not look so much at the external environment of the market as they should look at their own internal environment, meaning, did they sleep? Are they feeling okay? Is the market too expensive for them right now? Are they going to be interrupted? Because that's the only thing you really have control over, is executing your position or deciding if you trade or not. The market doesn't care about you. It doesn't care about me. It's a neutral entity. So the only consideration you really have to worry about, the only thing you have control over, is you deciding how you personally feel about it. And never dismiss your instinct. If your instinct says don't trade, don't trade. There'll always be a trade tomorrow. You're not going to get fired from the market. This isn't like a regular job or like any other career out there. You actually are rewarded for not doing anything if you don't feel like it, or if it doesn't feel right, I guess is a better way of putting it. Does that answer that question? when I'm coaching anybody who's beginning trading, I advise them to do what I call a big brother, little brother position. Meaning, if you're looking at NVIDIA, you'll look at AMD. If you're looking at Tesla, you'll look at NEO. Why? Because a lot of times they move in sync, but in a choppy market, sometimes the big brother can't move. You can't move a big ship in a small harbor because the ocean won't let you. But a smaller play of a smaller size company can run ahead sometimes where the big guys haven't got position to move. That's why I always advise people to look at a big brother, what I call the big brother, little brother position. So if you're looking at NVIDIA, look at MD. If one can't move, the other one could. Not always will, but could. If you're looking at Tesla, look at NEO. They're in the same industry. They're in the same family. They're in the same niche. They're in the same vein. And a lot of times you'll find if one doesn't move, the other one will. So I advise people to look at that primarily when they start trading or whatever industry interests you. Find the biggest play in that industry, the biggest player, and a smaller, more junior player, and learn everything you can about them. Trading comes down to nothing but homework. The more homework you do, the more information you have, the more successful you are, providing you can keep your ego in check and your emotions in check. And how do you do that? You do that by doing your homework so you learn to trust yourself. Market is made up of companies, but companies are made up of people, and companies are influenced by people's opinion. So the market serves companies, but it's run by people. If you have a company out there that's doing very well, but suddenly a bad rumor starts about them, doesn't matter how well they're doing, the influence of the people will tank or hurt that company's bottom line. So never forget that. Most people are very reactive, meaning they don't really know how it affects them, but they don't want to be left behind by the crowd. So they react to what everybody else is saying, and generally they become followers. The difference between news and information is, I think, what you're really asking me. And how do you know the difference? Well, one, you would look at homework, homework, homework. The more you do homework on your two specific plays or two specific big brother, little brother trends, the more you'll learn to differentiate what's important and what's garbage. If you're just going every morning to CNBC News and saying what's hot in the market, you're going to have a lot more nonsense and rumor that's driven by people and driven by opinion or driven by balance sheets than you will if you go, what is happening with NVIDIA today? What is happening with MD today? And if you work that angle specifically to the companies you want to research, and you do it consistently over time, you'll learn to differentiate what's important. Now, how do you translate that to seeing it on your charts or seeing it in real time when you're trading? The same homework that you're doing are done every day by the people that do this for a living, the investment bankers, the brokers, the agents, whatever. And that is reflected in the open interest of the trend. Meaning that if you've read and researched NVIDIA and MD for 3 months and you know every idiosyncrasy about this or that, when you see the president exercising his options contracts and selling 100,000 shares, you'll know that it is in his contract and he had to, and he's not like having no faith in the company because you've done your homework. The same things that you're seeing that you understand now through doing that homework, the brokers, the bankers, the investment agents, all those people, they understand the same thing. So it won't be reflected in the open interest trend. To answer your question, once you have done your homework effectively and you see that specific information reflected in the open interest of positions pending, meaning you have more people leaning toward the put side, more people leaning toward the call side, confirming with that, you will find that you are more correct. It's backed up by the money. So basically, you're doing your homework and then you back it up with proof in high money whales that are doing the same thing or believing the same thing you do. If you do your homework properly, you might even be ahead of them. You might learn something they haven't figured out for a week because they don't read everything. But generally, if you're doing your homework regularly and properly, and it's confirmed by big money trades pending in the direction you think you like, generally you're on the right track. The difference between news and information is probably a big one. And most people confuse news with information. For example, man sees a leprechaun in his Cheerios could make the news. Stuff happening about Prince Andrew can make the news. Anything essentially that people would find interesting or that newspapers could use just to sell newspapers as fluff can make the news. Information comes from research, and it's generally buried in small details that happen 1, 2 weeks, a month, sometimes a few days, sometimes 6 months ahead of the actual thing, the event happening. For example, hypothetically, NVIDIA might make a soft announcement. They are pending negotiations with company X, or negotiations are starting with company X. Note that in your head. That's potential information. They're telling you, they're telegraphing ahead what might happen. When you make notes and do your homework properly, and that comes back up in 2 weeks and go, company X is this, is now working with NVIDIA. If you followed it properly, you'll see that trend shifting for not only company X, but possibly for NVIDIA 2 weeks ahead of that final announcement. And you'll be in a position, because you remembered it with your notes, to take advantage of that play. The market is made up of companies to serve people. People generally don't follow information, they follow news. News is always entertainment and usually stale. Information stays as fact and usually takes work to find. Right? I mean, NVIDIA could do X or Y in the market, but it won't make the front of the Globe and Mail or the Wall Street Journal or the New York Times. The president being upset with somebody will make the news. Some, things that aren't affecting the market as much as you might think. President's a bad example, but it's the same kind of thing. Fluff will make the news. You want information. And you live and die by, as a trader, by knowing how to apply information to your charting, information to your position, and information to your risk. And once you apply that information, you'll have a lot less bad trading days or a lot less loss days. It all comes down to homework. And homework. When in doubt, do your homework. That's why I say focus on 1 or 2 companies, a big brother and little brother, and learn everything you can about those 2 companies. You don't need to take every trade that crosses the board. You don't need to take every trend that crosses the board. You don't need to chase after every runner that moves. If you learn to focus on big companies and just take one, you can make a very healthy trading living just trading one company like NVIDIA all day long. Just one company. And if you want to increase your odds of success, trade one company like NVIDIA and their little brother like AMD. And focus on nothing but that at the beginning. Become an expert in that. Once you do that, it becomes a lot easier to ignore the fluff and the noise of the rest of the market because it doesn't affect you. Success comes to those who are prepared with homework and work consistently, accumulating their financial results. Just be cumulative, grow slowly, be happy with working on 1 or 2 specific positions, taking one trade a day only, and be done with it. Does that make sense? A lot of it comes down to people over trading. They overtrade. They trade when they're not emotionally, physically, financially, mentally prepared for the day because they feel like they have to. And when they get in, they overtrade the position. Myself, I only trade one trade a day. If it works, I make money, I'm done. If it doesn't work and I don't make money, I stop. Same thing, one trade a day. Either it worked or it didn't. Either it was successful or it didn't. Takes discipline. Well, everybody else is running for the rest of the day, going back in. But doing that one trade a day, focused with your homework on 1 or 2 tickers only, removes revenge trading, removes FOMO, removes greed, allows you to focus more on a specific industry and specific tickers within that industry that are likely to move, and increases your odds of success. Because as I teach, ABC, always be cumulative. And you cannot be cumulative if you're spreading your attention across the whole market, chasing runners, getting lucky, chasing every mover up or down. The key to being cumulative is to focus specifically on what you want to grow and be happy with 10%, 5%, 3%, 20%, whatever a day, and cumulatively grow it by focusing specifically on one or two tickers and no more, and one trade a day, no more. If you do your homework properly, you'll know when the price is already priced in. Because, how do I put this? You'll see a differentiation or an increase in the open interest, in the shift towards the trend that is reflected by new money coming in or money coming in for longer term. You'll also see, through repeatedly reading about and researching your one or two tickers, that this doesn't really move the needle. NVIDIA partnering up with company X, where no money changes hands and they're just partnering up for partner's sake, location, whatever, doesn't really move the needle. And you'll see that or understand the difference between what moves the needle and what doesn't by doing your homework. It comes down to watching where the big money goes. You see, everybody follows the whales. And I use the analogy that the market is like an ocean. Well, if the market is like an ocean, and if you've ever been out on the ocean, whales eat a lot of food. They move and they change the wake of the waves. They're large, they're sizable. And a lot of medium-sized and smaller fish follow whales around, eating what they leave behind, what they can't catch, what is just knocked stunned in their wake, because they don't have to hunt for it. You're doing the exact same thing with this trading, with this kind of trading. You're focusing on where the whales are by one or two specific tickers. You're learning everything you can about that current, meaning the trend. You're watching what they do because you don't want to go against them. You're coming alongside them, and while they're busy eating, you're taking what's left and growing your size cumulatively. You're not pretending to be a whale. You're happy being a smaller fish. The key is to grow safely, successfully every day. You don't get in their way. You don't try to pretend you have more capital than they do. What you do is you are very specific in where you are in that ocean. I find a lot of people who trade, they not only overtrade volume, they overtrade tickers without research. They chase what's moving. They chase what's popular, hoping they get a little bit left behind. That's fine. But if you're always chasing, you don't know where you're going because you're chasing something else. What you're chasing has a direction. It probably has a destination. You don't know that. You're just chasing it. So a lot of people come in and they go, NVIDIA's moving, follow NVIDIA. Oh, Tesla's moving, get out of NVIDIA, go to Tesla. Oh, Tesla's not moving anymore, go to NEO. And they go around and around and around chasing trend. Success belongs to those who are specific, cumulative, and patient. If you are specific in your intention, do a specific homework on specific tickers, meaning you don't overtrade the position, you don't try to learn every ticker there is, you're specific on the tickers you research, one or two, no more. You plan your entries, you plan your exits based on what the whales are doing. You're not getting in their way, you're working with them, not against them. You're working with the market, not against it. You're not fighting the trend, you're going with it. And you are cumulative in your growth. Meaning, while everybody's off chasing the big and 2 and 3 and 400% bangers, you're happy making 10% a day, 15% a day. And then you're done. You don't look at that trade again. One and done. Either it worked or it didn't. It either taught you or it made you money. That's it. Because your goal is to beat the bank. Because you're not going to be able to, the average person, unless they're a billionaire or trillionaire, and they're not going to make it, are not going to have the same returns for their day-to-day banking needs as somebody like Elon Musk or Jeff Bezos or anything else. They're getting lucky. They're lucky if they're getting 1% a year on their money, 2%, 3% a year on higher volume. And that's it. Your goal is to beat that number every day. Every day. If you do those things, you'll be successful. A wealthy position belongs to those who are patient and cumulative. A rich flash bang like a firework position belongs to those who chase big runners. Eventually, when you chase, you get tired or you get hurt. But if you're cumulative and you're safe, your likelihood of having a long, successful trading career is a lot greater. Does that make sense?